Like we want to create more use cases for Bitcoin, which like midterm will increase demand for Bitcoin.
To me, Babylon feels like a really exciting catch-all for activity that can happen on Bitcoin that's not happening.
Created is a security and staking layer for Bitcoin, as well as this kind of liquidity layer.
Hello, everyone, and welcome to the DeFi Podcast. I am joined today by two of my regular hosts, Red and Jared. And today we have with us a very special guest from Babylon, Clayton. Clayton, how are you doing, bud?
Good. Thanks for having me.
Yeah, our pleasure. Looks like the Bitcoin ecosystem is really cooking, so really excited to have a chat with you about Babylon. It's going to be fun. So, but first, let's do a quick markets update. Stocks are basically unchanged from last week, up, maybe like less than 1%. The Fed meeting yesterday was largely uneventful. Seems like they're in wait and see mode on the economy because of tariffs. And the chances of cuts in June have basically evaporated since last week. We're now pricing in just 5 bips of cuts for the meeting. That's about, something like 6 weeks away. Bitcoin is doing better. It's outpacing stocks, which is nice to see. It's up about 3-4% in the past week, and it was flirting with 100K while we were preparing for the pod, but now it looks like it's actually crossed above 100K, which is nice to see. So we've kind of reclaimed 100K here for the first time since February. I can't believe I'm saying this, but it looks like ETH is the best performing major of the day. It's up about 10-11%, pushing back above 2K. That's awesome to see. Let's go. So we're starting to feel pretty good here. Alts seem to be enjoying a bit of a bid, but nothing is really outpacing ETH, at least not by much, So hopefully we get some clarity on tariffs and regulation. And I think there's some important votes today in committee regarding the stablecoin legislation that's making its way through Congress. So we'll be keeping an eye on that. But all in all, things will look a little bit more hopeful this week than last week. So how are you guys feeling about markets? Red, Jared, Clayton, if you want to add anything, what are you guys thinking?
On our way back up to all-time highs, hopefully.
Yeah.
Pretty confident. I'd say that's most likely going to happen at this point. I think there was a little bit of hesitation there, and that seems to mostly have started to pass. So Bitcoin, at least, I think is going to probably start making its way up slowly, if a little bit choppy.
Yeah, it seems always.
I'm kind of perma-bullish anyway, so I always think we're going to all-time highs constantly. But all the fundamentals have just been strengthening this whole time. Like if you look at activity on chain, if you look at like one of the big measures is like number of stable coins on chain, which historically have fallen significantly when we go into bear markets. That's just been climbing up despite bad price action. So I think we're in a probably pretty good place on the whole.
Did you guys see that thing last week when there was that huge blackout in Spain and Portugal, and for some reason at the exact same time, the amount of stable coins from Tether jumped up like 5 billion, like in the same exact time frame, because all the banks were down? That was kind of crazy to see. It's really cool. Money had nowhere else to go, so it just went on chain. It's kind of fun. Yeah. So, in terms of crypto news in the past week, it's been kind of slow, to be honest. There was an important announcement yesterday that Stripe is incorporating stablecoins into its platform. Just to speak further to what you're saying, Rhett, that's also, that's really good to see. Right before we got on the pod, I also saw that Coinbase bought Deribit for $3 billion, which is a huge M&A happening in crypto. For those of you who may not know, Deribit is basically the biggest options market maker in crypto. All the institutional people, if they want to get decent liquidity in Bitcoin options or any other kind of altcoin options, that's where they go. So it seems like the M&A space in crypto is heating up, which is nice to see. I guess the one big piece of news in crypto land before we dive into Babylon was the Pectra upgrade this week. Rhett, if it's okay, can I hand it off to you to just give everyone an update on the Pectra upgrade?
Yeah, so there's a whole bunch of EIPs that went into it, but I think there's just 2 main things that most people are paying attention to. I think one critique that I've heard is that Pectra took a little too long. I think it's been 18 months since the last hard fork. So that's longer than is anticipated. There was some issues that the EF thinks they've maybe solved. So I'm guessing we see upgrades to Ethereum happening a little bit more quickly from here on out. The two big upgrades that people are talking more about are, one, it used to be that a validator was always 32 ETH, no more, no less. And basically, as you get an enormous amount of validators, then it kind of hurts network performance. And so what they changed is now a validator can have anywhere between 32 and 2048 ETH. So what you'll see is the total number of validators come down because there are lots of individuals and institutions that just run tons of validators, so they can just collapse them into a lot fewer. That basically frees up some bandwidth in the Ethereum, consensus. And so that kind of enabled them to increase the number of blobs from 3 to 6. Blobs are what L2s use to post data. It's a doubling. It's still way, way less than what you see out of like Celestia and EigenDA, et cetera. Some would argue that's fine because Celestia and EigenDA maybe have more than is needed for current needs, but there's kind of a debate there. And then the other big change with Pectra, I'm curious to see if other EVM chains fast adopt this. It basically makes all 0x wallets like essentially smart contract wallets. And there's a number of things that like improves from a UX perspective. So one of the things that a lot of people have been annoyed about over the years is every transaction you have to do an approve and then an execute. This will make it easy to just kind of bundle those up. And so that will, just improve the user experience. And there's some people who think that even those minor UX, annoyances have been like a big drag on adoption. I don't really have a strong opinion there, but that's one of the other big changes.
I think it's worth mentioning. It may also drastically improve the ability for scammers to drain wallets as well. I've heard some comments about the fact that you can now essentially sign over permissions with a signature rather than a transaction now, which could be a new attack vector for some people. Is that possible, you think?
Yeah, I've kind of had the view that the wallets are already like dangerous places. So does it marginally make it more dangerous? Maybe, but the person who's maybe signing a malicious signature versus a malicious transaction, it maybe would be the same thing. I don't have a super strong opinion there. I do have a strong opinion that all of crypto needs to improve. It's like, make it harder for people to get scammed. And some of these things like social recovery wallets and stuff like that, I'm a fan of, but there needs to be improvement there. I don't have a strong opinion on whether or not that's going to be a big like additional attack vector.
Is it, dude? I've been meaning to go look for this. I haven't had time to look at it, but have you seen any numbers about like what the validator count on Ethereum looks like after the Pectra upgrade?
It should take a while to pare down, I think. I haven't even watched it closely.
Do they have to wait for the validators to roll or something? Does that have to happen?
Like if I'm sitting at home running 1,000 validators, then I need to go like choose to, aggregate them. And I don't know that everyone will choose to do that super quickly. And then some of the like liquid staking protocols the liquid staking protocols themselves will have to go through upgrades in order for their underlying validators to be able to do that. So like it's maybe a little bit easier for Lido, and they're the biggest. I don't know the deal with EtherFi, but I'm sure that both like Rocket Pool and Stakewise have to push new code in order for those running validators into those systems to be able to take advantage of this. And it may be true for the others too. I just haven't checked. So a lot of staked ETH is liquid staked, and so I think that kind of migrates a little bit more slowly. And then other people who are migrating, I'm guessing you don't see a huge like immediate drop off in total number of validators. But you probably see some. One thing that'll be interesting is that I think some people have found it difficult to know how many distinct validators there are, because if I'm running 1,000, you're running 1,000, that's really 2 individuals rather than 2,000. And so as this kind of aggregates where you have large capital sinks, it'll probably be a little bit easier to tell kind of, roughly how many distinct node operators there are.
Yeah. I mean, for a long time, it's been kind of frustrating not really knowing that unique number. But it sounds like we're not even going to get that. It's going to take a while, if ever, for us to really get that, because people can opt to keep their current structure, right? But anyway, okay.
You'll never know for sure, but you can kind of guess at it, and there's already ways to kind of guess at it, and there's ways to kind of guess at like which like consensus and execution clients are people running, but those you can't know like for a certainty either.
Got it. Okay. All right. So otherwise a pretty quiet week in crypto. I was very excited when Clayton, when we found out that we were going to have you on, because I saw David. Am I pronouncing it right? Is his name David Say? Is that the right way to pronounce his name, David Say? I saw him speak a while ago. And I hold Bitcoin, but I don't really do anything with it. And when I heard him first talk about Babylon, I got really excited. So when I found out that we were going to have you on the show, it was super. I have like 100 questions for you. I don't think we're going to have time for all of them. But before we get into those, would you mind just tell us a little bit about your background and how you ended up at Babylon?
Yeah, definitely. So I got my start in crypto professionally in the staking space. So I was an early employee at Figment, was there for a little over 4 years, running protocol strategy for the organization. Also was a partner at the venture fund, Figment Capital, and then got fairly deep in restaking and LRTs and things like that. So I spent a little time with an LRT company that got acquired by Eigenlayer, and have been at Babylon since September of last year. Obviously, like the interesting thing about Babylon is that we are creating the staking layer for Bitcoin. So if you're looking at Bitcoin as a network, right? One of the value propositions is that it doesn't actually do much, right? Just standard send and receive, store of value are kind of the two native use cases for Bitcoin on the Bitcoin network. And what we've created is a staking functionality that sits natively on that network. So there's no bridging or pegging with our staking functionality that we've created. And then obviously what we can do with that is we can leverage those stake positions and offer additional security guarantees to other protocols that want Bitcoin security. The second thing that's kind of interesting in what we built is a lot of people have been leveraging this staking functionality because it does effectively lock the Bitcoin within a wallet, leveraging UTXO transactions to mint a representation of that stake position on other networks that may have more expressivity than just send and receive on the Bitcoin network. So really, like what we've created is kind of this security and staking layer for Bitcoin, as well as this kind of liquidity layer as well. That people can use to mint representations, which allows for more non-custodial Bitcoin to enter the DeFi ecosystem as a whole, whether that be on protocols that are consuming Bitcoin security through Babylon or being built on top of Bitcoin, whether they're in L2, et cetera, or if they do just want something that isn't necessarily WBTC or CBBTC. Something that's like more centralized per se, but still want that value of Bitcoin to be used within DeFi. So
can I interject here for a second? So would you mind just explaining in really simple terms, what is it exactly that Babylon is doing to the Bitcoin that's sitting on the Bitcoin chain to turn it into a proof of stake asset? Just not too technical, just kind of like in simple terms, because, like from my point of view as a Bitcoin holder, right, I don't want to, necessarily bridge it someplace. And you're saying you guys are not bridging it, right? So what exactly is happening?
Yeah. So if you're looking for some baseline reward, the same way that you would be, delegating an asset on a standard proof of stake chain like Solana or Ethereum potentially, for example. Although I think our staking functionality is more simplified from an end user perspective compared to Ethereum. Essentially, what we built is a quote unquote delegated proof of stake protocol on Bitcoin. So we leverage UTXO transactions as well as Taproot to where you do effectively stake it, but it doesn't necessarily leave your wallet. Right. So it would be the same as like delegating to a validator on Solana, to where you're like pointing your asset, so to speak, to a validator on Solana, but it's not necessarily in custody of that validator is not necessarily in custody of that asset. So it doesn't leave your wallet, but when you are staking, you are accepting the risk and reward profile of that, what we're calling venality providers that are providing security to other blockchain protocols.
I understand.
Yeah.
Sorry. Just because if I'm gonna interject once in a while, because I'm gonna have some left curve questions for you. Otherwise, I'm gonna forget. So, like on Ethereum, right? You can delegate and validate or whatever, and technically there's this risk of slashing, right? On Avalanche, for example, there's no risk of slashing. You can validate or delegate. The worst that can happen is that you don't get your rewards, but you get your initial principal back. How does that work with Babylon?
Yeah, well, so Ethereum, for example, you can't delegate, right? It's not a delegated proof of stake protocol. It's a pure proof of stake protocol, to where there's a one-to-one relationship with the staker and the validator, unless you're going through some liquid staking service or some infrastructure provider that's pooling those assets together. But you don't necessarily own the validator key, and that Ethereum does get sent to a beacon chain that is like staked and not accessible to the person who owns the withdrawal address, right? So what we have designed is a delegated proof of stake system, right? So it does not leave your wallet. You are locking that, right? And there is an unbonding period. It's a 7-day unbonding period. For example, like Solana is like 2, but you can get slashed on our protocol. But that would only be at the fault of a validator performing some sort of malicious action. But at any point, you can unbond without having to go and speak to your validator or tell them to do something on your behalf, which is much different than the standard experience that someone would have with Ethereum today.
Got it. Okay, and so this might be, you can pass on this question if you want, but like one of the other main, using Bitcoin to launch a chain things is Stacks, for example, right? So Stacks is like the other, I think, thing that Bitcoin people are looking at to earn some yield. I mean, there's others, of course, but it's one that's like a New York-based team. They're well-funded. The guy's like, former Princeton guy, been around forever. So maybe he's a little bit more trustworthy. How does Babylon compare to something like Stacks? Because with that one, it's kind of like you bridge you lock and bridge your Bitcoin and you earn Stacks. It's a little bit different, right? How does it differ from that protocol?
Yeah. So what Stacks is doing right now, and this is just, a difference of opinion or different, thought on what people, want in the space right now. But Stacks is like merge mining and settling, these transactions on the Bitcoin network today. What we are doing is taking a different approach, to where we don't think, the Bitcoin network as it stands right now is scalable to the point where we see like actual capabilities for the Bitcoin network to settle all Bitcoin transactions today, whether they're settled off chain or on chain. So really, what we're doing is exporting the value of that Bitcoin to other protocols that can actually take in that throughput. So the main difference is that we are taking the value of Bitcoin and allowing people to use that for security to secure other chains that want some additional security guarantees, and also have a ramp to bringing this Bitcoin liquidity in to their ecosystem. So the main difference is, Stacks is settling more things on the Bitcoin network now, and we're actually just exporting the value of Bitcoin and security to other places. That doesn't go against the ultimate goal of having more expressive transactions get settled on the Bitcoin network in the future. We are actively working around BitVM technology and looking at solutions like OPCat, which could in the future allow for those transactions to be settled in a more performant way, but I don't think the Bitcoin network is there yet today.
I do want to touch on a little bit of the Bitcoin scaling question a bit, but first, I'm actually kind of curious, just what your feedback has been from people on the security assumptions of putting Bitcoin in, for example, like a wrapped token versus in a system like Babylon.
Yeah, so I mean, you can stake Bitcoin right now through Babylon without having to receive a wrapped token. But a lot of people that are staking Babylon today are leveraging an LST issuer, like a Lombard or a Solve or a Pump BTC. We have about like 10 LSTs that are issued through our staking functionality today, because like the liquidity value is also super important, right? Like, I mean, if you're looking at Ethereum, for example, close to like 50% of staked Ethereum is done through an LST issuer, because people do want to stack these rewards up, and the liquidity value, like, goes beyond just like having, network security from an end user perspective, right? Like most people don't necessarily like want to be doing something that's like minimal for the benefit of the greater good. If there's like, specific, reasons to do something more as an individual, as long as you understand like the risk centered around what you're doing. That being said, right now, I would say the risk of going through an LST issuer is similar to, any other network that's leveraging or has an LST solution for end users, right? So like, there is counterparty risk, because like you are like giving, some ownership over this asset to another person that's kind of servicing these stake positions for you. But ultimately, what we do plan on building in the future is kind of this trustless LST creation, leveraging BitVM technology, which we plan to announce more information about later this year, which will allow people to maintain full custody and control of their native Bitcoin while still receiving a representation of that stake position on other execution layer environments. We think that's like a huge benefit, not just for the not your keys, not your crypto folks, but also like institutions who need to maintain ownership of their assets, whether that be through a custodian or otherwise.
Not to speak for you, but when restaking was becoming a real thing, I think Eigenlayer was kind of mostly leading the charge at first. There's a lot of discussion amongst people I knew of like, oh, this is going to add so much risk. LRTs are going to be so much more risky than LSTs because you're accepting additional slashing conditions and yada, yada. My view was, and kind of still is, like, slashing is one of those things that proof of stake as well as these restaking platforms are meant to be easy to not get slashed if you're not malicious. And slashing is ultra rare. I think slashing and restaking is also going to be ultra rare. So while there's always some risk of that and some risk of, wrapping into some kind of liquid staking token, it seems to me that like a liquid wrapped Babylon deposited Bitcoin, the risk profile there compared to other things in DeFi or crypto is like, my view is that the marginal risk there is like ultra low.
Yeah, I mean, if you're looking at the two biggest risks that actually have like historical numbers attached to them that are like the highest, right? It's exploits through hackers, and it's counterparty risk, right? A bunch of people lost a bunch of money, at least for like a period of time, through FTX and BlockFi and Celsius having issues. Like that's all counterparty risk, right? People permanently lost money through exploits. In terms of slashing risk, just like proof of stake ecosystems, I mean, I think like maybe 400 to 500 like single validators with 32 ETH attached to them have gotten slashed in Ethereum like over the past 4 years since proof of stake has been live. That equates to like roughly 500 ETH that has gone missing through like a catastrophic from a slashing event. And then if you're looking at DeFi risk, right, it's like you have like the Terra collapse, right, which obviously was like super significant, but that wasn't necessarily like waterfall sort of moment associated with like stacking a bunch of risk on top of each other. It was like this single mechanism that everyone used that ended up being like not true, right? So I don't know if like you're just adding a bunch of like additional slashing additions to a single staked position results in like it being the riskiest thing in the ecosystem for anyone to participate in. And obviously there's no like really historical example that like showcases how like problematic that would be if looking at other things that are much more worse, right? Which I think is like, exploits and counterparty risk for the most part.
I'm also curious. Yeah, that's helpful, and that kind of fits my view as well. Where like of all the things I could do in crypto, restaking feels like low marginal risk. Not financial advice, but I'm very curious to know where you're seeing the most demand for that kind of security hypothecation. Is how I think of it. I know a friend of mine is the founder of TAC, which is kind of an EVM chain serving the Ton ecosystem. And I think theirs is like dual stake to the TAC token. And then I think they're using restaked BTC through Babylon. So I'm curious if it's more chains that you're seeing like L1s, L2s, or if it's more like kind of novel new services of, some kind of infrastructure service.
Yeah. So I think the good thing about our solution is that it is more simple. And we only target execution layer environments for the additional security that we offer. Also good to mention that like the Bitcoin hasn't been staked yet. So I wouldn't necessarily call it a restaking protocol, but it is a shared security protocol in its design. So like, from what we're calling BSNs, which you would call like an ABS on eigenlayer, right? Like those protocols are like asking the same things from us, where it's like, we want additional security, we want dual, token model, because we see the value of what shared security could offer us. At the same time, our value proposition kind of goes beyond that, right? Because we are just targeting execution layer environments. So really what these like BSNs are looking for is not just additional security from Babylon and Bitcoin stake, but also looking for a connection to the Bitcoin network, the Bitcoin community, and that Bitcoin liquidity that is effectively securing their protocol, right? If you're looking at like a middleware service, whether that be like a Chainlink or some ABS on eigenlayer, the liquidity value is not super interesting, right? Like you don't like do DeFi on an Oracle. An Oracle services a DeFi ecosystem, and so the liquidity value becomes less interesting when only servicing middleware services with restaking. And our plan is to tie in this security value and liquidity value so that we can, have a way to not just secure these protocols, but inject Bitcoin liquidity into these ecosystems as well. And TAC is one of those protocols that we've been speaking with about that.
Can I take a step back and just ask a bigger picture question? Because it sounded like you came from the staking world. Now you're working for Babylon, which is like kind of trying to bridge Bitcoin to the proof of stake world, right? Not literally bridging, but you know what I mean, like connecting Bitcoin with kind of proof of stake a little bit. What has the reaction been like for that? Because I'm sure in the Bitcoin space, like I'm not like a whole Bitcoin, but I don't really feel like I'm a Bitcoin maxi or whatever. But how has the reaction been for that? What's your impression?
I mean, it's been positive, right? I think we are kind of at the forefront of this Bitcoin Renaissance BTC-fi thing that's, been taking place as like a narrative over the past 2 years. I will say that around like 84% or like around like 80% of the TVL that sits on the Bitcoin network today natively is done through our staking functionality that we've built. But, depending on who you're talking to, right? Like you mentioned this before, but like I haven't done anything with my Bitcoin in forever, right? Or the last time I did something with my Bitcoin, I sent it to BlockFi and I got screwed, right? So there is a little bit more, education around what we're trying to do in the sense of like, we're not trying to reinvent the wheel, right? People want to put their assets to work. people haven't thought about putting their Bitcoin to work, or previously they have and they got screwed, right? So there is a little bit of re-education there, but also the benefit is like we've created, this use case that is fairly familiar to most people now, right? Whether they're going through an LST issuer, they're self-staking, they're running their own infrastructure, they are like a large institution that's has been staking like millions, if not hundreds of millions of dollars of ETH already. And so re-explaining staking to people is not necessarily what we have to do. It's re-explaining it in the context of like Bitcoin as an asset, which does, make it a little bit more difficult sometimes, but because we've designed it in a very familiar way to something that people have done with other assets, that makes it much simpler. I think the difficult thing, in terms of conversations, it's like, people are asking like, well, who's going to use this? What is it for, et cetera? And that's where this security plus liquidity comes into play in those conversations. And people are starting to wrap their heads around it now, which has been helpful. I think really like our focus is, to be honest, like people don't necessarily pay for security, especially from like a external entity that much, right? There are examples, but especially if it's an external entity, they really want value beyond that. And so really what we've been pushing is we're not just offering, extra security, we're offering this deeper connection to, Bitcoin holders, Bitcoin liquidity, and the Bitcoin network as a whole. And we believe that that's something that people are willing to pay for, just given the unique aspect of it.
And when someone gets comfortable with, let's say someone's a BTC holder and they get comfortable with Babylon and they say, okay, I'm going to go ahead and put my Bitcoin to work. I feel more comfortable, way more comfortable than something like a BlockFi. To the extent you can talk about it, can you talk about like the yield that they would earn and what that yield comes in, like in what shape?
Yeah. So right now, I mean, there is a reward rate active on the protocol for staking Bitcoin today. You can check on our website what that number is if you wanted to. I can drop some links here if you want to share later. But it is not like Bitcoin as a reward asset today. So, there is only one BSN live. That's our chain, which is the Babylon Genesis chain. And the reward token is our native token for offering security in the form of Bitcoin stake right now. When other BSNs are able to integrate, whatever they want to pay is what the reward will be, whether that be their own native token, stablecoin, ETH, or some Bitcoin wrapped asset. Unfortunately, because there's not any sort of smart contract capability on Bitcoin currently, you can't do Bitcoin on Bitcoin rewards or returns, so to speak, because there's no real way to do that in a non-custodial way on the Bitcoin network today. That being said, it doesn't limit people from being able to pay in WBTC or CBBTC or some LST that's issued through Babylon as a reward token.
Got it. And what role does the baby token actually play? You say right now that's what you earn if you're staking your Bitcoin through Babylon, you earn baby token. What does the baby token do right now?
Yeah, so the Babylon Genesis protocol is a layer one as well, right? So it's a staking token for the Babylon Genesis protocol. It is also a token that's being used to reward this Bitcoin security that the Babylon Genesis protocol is consuming. It's also what you would use to pay for transaction fees on that chain, and what you would use as a way to participate in on-chain governance. So I would say those are the four native use cases. Beyond that, we'll see, right? But the goal is to create more use cases for that token as well.
I'm curious on the Babylon Genesis chain. What are things that users could do there right now?
Yeah, so we do have live DEX functionality as well as restaking functionality currently. It is a smart contract enabled chain. There are things that you can do on that protocol today. What we do plan on doing in the future, which we think is much more interesting, is having a EVM layer on that protocol. So the goal is for the Babylon Genesis chain to be this kind of like neutral layer for all of these BSNs to tap into, and have, a good amount of BTC liquidity on that chain that people can tap into at any point in time. And we think EVM, makes that much easier from, an end user perspective, as well as a developer experience perspective. And then it offers like just the ability to integrate and connect to these other BSNs much more easy, right? A lot of these BSNs are EVM layers in their own right, or they are some other protocol that has a connection to an EVM ecosystem already, and so that just like streamlines things much more efficiently. And then in the future, right, and I mentioned this earlier, but this trustless LST creation. So we will be building a trust minimized bridge between Bitcoin and the Babylon Genesis chain in the future, which will act as like this bridge between Bitcoin and all of the Babylon ecosystem in the long run, which we think is interesting.
Very cool. Babylon Genesis chain is like, it uses Cosmos SDK, is that right?
Yeah, that's correct.
Got it. Okay, and I saw there was some, I didn't have a time to look into it, I'm sorry, but I saw there was some partnership announcements with Osmosis and one other Cosmos chain. I think it was Injective or something like that, right? Am I getting that right? What kind of stuff are you guys doing with those guys?
Yeah, so Osmosis plans to be a BSN. Also, TAC is leveraging the Cosmos stack as well. So they're going to be consuming Bitcoin security once we have that ready for them to use.
Oh, very cool. Okay, so like when you look ahead for like the next, this next 6 months, 12 months, 18 months, you're kind of looking for, like, are you looking more for chains to partner with? Like you want people to come launch a chain using Babylon and BTC as for proof of stake? Or are you also looking for DeFi protocols? Like, you're the head of BD for Babylon. So kind of like, what is your ideal, what does Babylon look like in 12 months for you in an ideal scenario?
A lot of chains and rollups consuming Bitcoin security, a lot more Bitcoin activity happening in general on decentralized rails, and us being like a part of that, whether it be happening on our native chain or on BSNs or just beyond, right? I think really when you're looking at Bitcoin, right, and then you're looking at all the growth of activity in general taking place on dexes rather than sexes, like Bitcoin really isn't a part of that conversation at all. And I don't necessarily think it's because the asset is seen as different, right? If you're looking at the majority of volume that's taking place, looking at like asset by asset, like Bitcoin has the most volume out of any asset, unless you're looking at stable coins on a daily basis, with like 95% of that happening on like, centralized exchanges. And so really like our goal is to get more of this value on decentralized systems, right? Because really like, all you're doing by trading Bitcoin is benefiting, a single company by doing so, and that's not necessarily a bad thing, right? But it goes against like first principles of like why decentralized networks makes sense for an end user, right? Like you own a portion of this network. You are receiving some value from activity that's happening on this network if you're staking an asset. If you're, trading something on Coinbase, you're benefiting their shareholders, right? Which isn't necessarily a bad thing, but it's like, why are you holding, X asset for X reason if most of the goal is to just have that activity sit there for the long run. So yeah, I mean, more applications on Babylon Genesis, more people using Bitcoin in general within the broader crypto ecosystem, and then also having more BSNs integrated into the security that we're providing.
Yeah, to me, Babylon feels like a really exciting catch-all for activity that can happen on Bitcoin that's not happening. So like, let me explain what I mean by that. So like, I think for those of us who kind of live and breathe crypto all day long, like, Bitcoin's awesome, but like the things that are currently, or at least in the last few years, at least the things that are happening in, Ethereum space or L2 space or one of the other majors or something. That's where the new activities taking place. But then when was it? It was like fall of 2023 when that whole inscriptions thing happened, right? And it clogged up every chain, but it really started as a Bitcoin thing. I'm bringing that up because I think there's a whole sea of people out there that we don't really talk to that really want things to happen on Bitcoin. Like there's definitely this huge premium that I don't appreciate or didn't appreciate. Like people want things to be attached to Bitcoin. Like you go out there and talk to the random person on the street, you ask them what they think about crypto. They're like, yeah, Bitcoin's doing great. Like it's just Bitcoin. Bitcoin is really the only game in town. For us, obviously not, but for everyone else, it's like, that's crypto. It's just Bitcoin. So to me, Babylon feels like, I don't know what the most active part of, smart contracting / Bitcoin is going to look like in a year. But to me, Babylon feels like it's in a unique place to be able to capture whatever it's going to look like. As long as the proof of stake network decides to launch with Babylon, then a lot of the activity will happen with Babylon. That's one of the reasons why it's so exciting to me. It has competitors, of course, but the idea of just being able to stake and keep everything on the chain is very appealing, right? Even if there's some small amount of slashing risk.
Yeah, I think right, like Bitcoin as an asset is the king of like this store of value that means a lot of different things for a lot of different people, and to your point of like having that baseline asset being used as like the security asset as well, right? It's like similar to, I think like when Solana launched, a lot of people expected a lot of this like, ETH liquidity to move over just because it was like a faster and cheaper place to make those ETH trades. And like, you don't really see that happening, right? Because it's like, well, it's like being secured by Sol. And if that ends up being true for, every other like alt L1 chain or something that people are doing with Bitcoin as an asset, right? Then like if there is an option for Bitcoin security for these execution layer environments, then if that ends up being true, then you would see most Bitcoin activity happening on Bitcoin secured networks in the long run.
That makes sense. I think, I guess you don't call it restaking because Bitcoin isn't staked, but shared security networks, I think the value prop is largest, the more valuable the asset that you're staking. And so if Bitcoin really will end up dominating the store of value purpose, then it's probably going to be the most important asset to be securing these execution environments with.
Yeah, also too, I think the unique difference, right, is we're using an asset that's not stakeable as this shared security baseline asset, right? So, I mentioned earlier that I didn't necessarily think that like, slashing was like a catastrophic like thing compared to everything else, like smart contract exploits and counterparty risk. And I do agree that this isn't necessarily like a problem as well. But if you're looking at using staked ETH as like a shared security asset, there is this like, issue with that in the sense of, ETH stakers are most bound to making sure that base layer is secure and like the long-term value proposition of that base layer is more important beyond everything else that you're staking. And because Bitcoin is not used as a security asset for the Bitcoin network, you're not going to run into that issue when leveraging Bitcoin as security, right? So we don't necessarily disrupt the Bitcoin network's consensus. Like that's done through the miners. Everything that we're doing with the asset goes beyond that, right? And so like we're never going to be in a position to break the Bitcoin network because so many people are leveraging our staking position, and all of that security is not like necessarily bound to other infrastructure that may have like other incentives to maybe not care about your BSN or your ABS for any point in time.
So that would be another argument for why this is better than merge mining for Bitcoin related networks, because merge mining does like rely on the same thing that's providing the base security for Bitcoin, whereas this is separate.
Yeah, and to be honest, that's why we. So David, our founder, was looking at merge mining as a potential solution here, and I think like 2 or 3 years ago he went away from that because he thought he did see this as an issue. There have been issues with merge mining, previously, like in production, right, to where some miners would refuse to merge blocks that people were like willing to pay like a good amount of money for, just because maybe there was some alternative motive by like breaking that. And so that's not necessarily the case for, what we're doing, right? Like if a validator or a finality provider does like refuse to accept some sort of transaction, they would get slashed in the long run, right? And there's no reason for them to not make money in our design.
I wonder if you have an opinion from a protocol level perspective about sort of like the scalability / longevity of Bitcoin when it comes to the reward mechanism, right? Right now, I think the block reward for Bitcoin is a little over 3 Bitcoin per block. And obviously it halves roughly every 4 years. Assuming 10 years from now, the Bitcoin reward is going to be 12% of what it is now, or about somewhere about that. The argument for Bitcoin remaining a useful asset long-term into the future is that as the block reward gets cut in half roughly every 4 years, there will be some amount of transactions accumulating on the chain that will increase over time to make up for the loss of revenue and the increase in competition, the more difficult the chain gets to mine, so on and so forth. So let's say 10 years from now, the reward's going to be 10%, 12%, whatever. Assuming Bitcoin is worth more than $1 million by then, I think that'll all be well and good. But if we start to see a very large ramp up in offloading transactions from the Bitcoin network to other networks, do you think there's a potential for the replacement of those transaction fees to basically just not be there? Does that present a problem for Bitcoin for like the security of the network, or just for the attractiveness of running a miner, or whatever? I think it introduces some potential questions in regards to transactions are no longer happening on the Bitcoin chain, which means that fees are not accruing to the miners. Instead, that's getting offset onto these places where they get locked up, and then that value is being created on other chains and not on Bitcoin.
Yeah. So, I mean, great question. So, I mean, generally there's like 3 ways to continue to compensate, the security of a protocol, right? Like you can either increase the inflation rate, which completely destroys Bitcoin as we're 21 million Bitcoin. It ruins like the main reason people are holding it, right? It's like store value. So that's likely not going to happen. You can increase, miner revenue beyond inflation, which is, to your point, having more transactions on the Bitcoin network. Or 3, you can increase the price of Bitcoin, right? So like increase demand for the reward asset. I think what we're doing, right, is 3. We, see that it's a very strong value proposition as a network for standard transactions, which is send and receive. It's a very strong asset for this like store of value concept, but like there's really not much you can do with it like beyond that, right? And like we want to create more use cases for Bitcoin, which like in turn will increase demand for Bitcoin. Obviously, there's a lot of people that want more transactions to exist on the Bitcoin network. And, we'd like to think that we're a part of those conversations. But, to the point I made earlier, like there isn't, capabilities to do anything beyond send and receive right now at scale. But, once, there is technology in place, like we do see that as being like the main way to go beyond this like fear of, inflation running out, right? It's like increasing, the amount of transactions, the type of transactions that can be settled on the Bitcoin network, and then also creating more native use cases for that, asset that is being used to secure the protocol. But yeah, to your point, I don't think you necessarily have to worry about it over this cycle, but this conversation will only get stronger and stronger to that like 10-year mark that you mentioned, right?
Those are good thoughts. I think, you guys increasing the value of Bitcoin, goes a long way here. You mentioned early on in the conversation some of these new opcodes people are talking about. I know some people have talked about like ZK opcodes that could enable like native ZK rollups and things like that. My guess is that's part of the like a pretty big part of the solution, is that if you get more expressive opcodes, then people are going to be willing to pay more to post more because they can do more expressive things there. Increasing block size also seems not super probable. That could also help. If you had larger block size, then you're going to get more people posting transactions. That seems, just given cultural, dynamic of Bitcoin, that one seems a little less likely.
Mm-hmm. Yeah, I mean, also too, there's a lot of people working on things right now on the Bitcoin network that may not, necessarily get the same light of day as like something that's happening on ETH or Solana, for example. But I think really what Bitcoin would benefit from is some standardization around some of these things that are being built, because it does become complicated for integrators, right? If there's 18 different rollup designs, like is Fireblocks or Coinbase custody or Anchorage going to integrate all of them, right? Or are they going to hope that one kind of wins, and then that one sort of functionality extends beyond to all of these rollups that are leveraging Bitcoin, similar to how rollups work today on Ethereum. So I think that would be helpful to get more of this institutional adoption there, but then also get more retail or not your keys, not your crypto folks from comfortable with doing something on a Bitcoin L2, right? Because it's if I have to read a white paper for everything that I'm doing with Bitcoin just because it's another layer, you kind of give up caring after it's the second one that you've attempted to use, right? So.
Okay, to work at Babylon, do you have to be a Bitcoin maxi? Do they ask you that in the interview process? What do they say? Or do they say you have to become a Bitcoin maxi? Who's your favorite? Who's your favorite Bitcoin maxi? And you can't say Michael Saylor.
Lynn Alden for sure.
Okay, yeah, she's great. Yeah.
I'd say Satoshi.
I'd say Eric Wall, even though he's not even considered a Bitcoin maxi anymore. But yeah.
So yeah, I mean the goal, right, is for us, it's not being a Bitcoin maxi. It's understanding that is the asset that people use for the first time. I mean, that's been changing now, right? There's interesting numbers where people are using Solana without ever having a MetaMask wallet. But, I think in general, right, when people think about crypto, the first thing that they're going to think about is Bitcoin first, and then, other things later. So really we see Bitcoin as this main bridge to the rest of the world, right? Where it's crypto is a part of people's, hopefully in the future, a part of people's everyday life. But it's not necessarily everything, right? It's you don't want all this industry to be the thing that only exists in the world. And so really, how do you get more people into this, ecosystem? We think Bitcoin is a good bridge for that. But Bitcoin isn't the only thing that we deem valuable, right? But Bitcoin security, liquidity, and, the staking functionality we think is going to be beneficial for a lot of protocols in the future.
Cool. Exciting stuff. I mean, it's awesome to see the whole BTC Renaissance thing, and for you guys to be kind of at the forefront of that. It's really exciting. I know a few people from our group here are going to be at the Bitcoin conference in a few weeks, which should be fun. That'd be great. Okay, well, listen, Clayton, this was great to have you on. Thank you for going through our rapid fire questions. I know it was a lot. We really appreciate you having on. It was a pleasure having you. We'd love to have you on anytime something's happening with Babylon.
Cool. Yeah, this was good. I really appreciate the questions, and looking forward to staying in touch.
Yeah, sounds good. Thank you, guys.
Thanks for the chat.